This week's number, 334,000. That's how many fast food delivery orders New Yorkers placed every day. No joke, one of my high school teachers predicted I would be an alcoholic working at a fast food restaurant. Yeah, fuck you. That was just a lucky guess. Welcome to Prof G Markets. Today, we're discussing the writer strike, AI hype on earnings calls, and Microsoft's next big bet. Here with the news is fast food consumer, Chick-fil-A extraordinaire, McDonald's September Man of the Month, Prof G media analyst, Ed Elson. Ed, what is going on?
I'm counting down the days till Costa Rica, Scott.
That's right. Daddy's sending his kids to Costa Rica. You came down to it. You had Tulum again, Costa Rica. What was the other one you were thinking of?
The third one was St. Bart's.
Oh, St. Bart's. Yeah, I could
to quote you, you said that was too ritzy for us. What does that mean exactly?
Well, that means Daddy's credit card has a limit, and that is he's generous, but he's not stupid. And also, you guys in St. Bart's, that's
it doesn't fit.
That's just, that's when, my wet dog jumps in the back of a Mercedes. That's just not a good idea. You guys are wet dogs.
Wet dog.
Costa Rica sounds good. It's kind of far, though.
Yeah, it'll be sweet, though. I've never heard of a company offsite to Costa Rica, but we're not just any company.
That's right. Go on. All right. What's going on in the news?
Let's start with our weekly review of market vitals. The S&P 500 was relatively stable, the dollar gained, Bitcoin fell below 27,000, and the yield on 10-year treasuries tumbled on fresh economic data. Shifting to the headlines. US inflation cooled for the 10th month in a row to 4.9% from a year earlier. That should make it easier for the Fed to pause rate hikes at the next meeting. The nation's banks posted record profits of $80 billion amid the banking crisis. It appears the industry in aggregate benefited from that turmoil as well as continued interest rate increases. Crypto exchange Binance is planning to leave the US and set up operations in the UK. As we reported last month, the CFTC sued the company for evading commodities compliance. Binance later said it's, quote, very difficult to do business in the US, and it's doing, quote, everything we possibly can to be regulated in the UK. Icahn Enterprises is under federal investigation following Hindenburg's short report, which questioned the company's asset valuations and dividends. We discussed that short position last week. The stock dropped another 15% on news of that investigation, bringing its loss for the month to around 40%. Airbnb reported record bookings and its first ever profitable start to the year. However, the stock fell 12% on the company's cautious guidance that the second quarter will be up against a tough comparison to last year, which saw a surge in revenge travel post-COVID. Disney reported a better-than-expected operating loss of $659 million for its streaming unit, down from the billion-dollar loss last quarter. But the company also shed 4 million subscribers. That's its worst drop ever. Shares were down more than 8%. And finally, as you predicted on this show, Scott.
Yeah, my prediction is around Tucker Carlson and Twitter. I think they're going to do something together. I think he's pissed off. And my impression of Twitter and Elon Musk is it's gone totally red pill.
Tucker Carlson is launching a show on Twitter. He claimed Twitter is the last big platform in the world allowing free speech. Elon Musk then clarified that there is no commercial relationship, but that he hoped others would follow suit and become content creators on Twitter. Scott, your reactions?
Listening to that self, I can't help but touch myself. Is that wrong? Is that wrong? By the way, people have been sending me personal emails saying I need to tone down the cringy sex jokes.
I also got an email from someone saying that.
People are just like, look, boss, it's not funny. It's really, just stop it already. Look, the banks, it's no doubt, there's going to be less competition. So a bunch of capital flows into the banks and they're making a bunch of money. So that's not shocking. That's the problem with consolidation, is that the companies become very profitable, but unfortunately it's at the hands of not only a better product or better service, but better margins through a lack of competition. The Icahn thing is really interesting. You've been following this and talking a lot about it on Twitter. What are your thoughts here?
Well, last week we pointed out that the accusations weren't just about mismanagement, but that it's about outright fraud, specifically that dividend yield, which they believe isn't subsidized by the cash flows and is therefore likely subsidized by outside investors. And you pointed out that's just a Ponzi scheme. That was our main point last week, and now it's just coming true. And I think we should also point out what you got right, which is that you made the point that Icahn will not go out without a fight, and that he'll make a huge deal out of this. And he had this pretty remarkable quote. He said, quote, Hindenburg research would be more aptly named blitzkrieg research given its tactics of wantonly destroying property and harming innocent civilians. So let's just say you got that prediction right.
Well, that's rich coming from Carl Icahn, who is literally, has this, rolls around corporate America for the last 40 or 50 years with a mace and a blowtorch. The thing I noticed about that was he owns, I think, about 80% of the stock.
Yep.
And so the question is there a play now that its dividend yield is 25 or 28% and someone has challenged him or kind of, taken their glove off and smacked him in the face and, in an affront to his honor, will he just come up with more sleights of hand to continue to pay this 25% dividend? Because he has so much capital, or could he do some sort of offering or some sort of financial engineering? Because he is a billionaire. He can keep the company. One of the assets I'm looking at, I'm kind of curious when the banks that underwrote the Twitter debt are going to cure it or sell it and take it off their balance sheet. And I would be interested in that paper because I imagine it's going to go out at a severe discount or a really high yield. And because of the success of SpaceX and mostly ego, I don't think Elon Musk is going to let Twitter go into receivership or bankruptcy. I just don't think he could handle that from an ego standpoint. So, and he's going to get a much more cash from SpaceX, such that he could just continue to pay the debt on the pay the interest on the debt. And I wonder if the same thing's going to happen here. If Icahn is going to figure out a way to capitalize this such that it's solid just for pure ego reasons. Now, the Fed's getting involved is really interesting. It feels as if more generally, whether it's George Santos or the libel case against former President Trump or some of these tech executives getting put away, I think Elizabeth Holmes is about to start her 10-year sentence. It feels as if the sheriff has shown up on a lot of different levels, and that is the Justice Department is saying that the markets and more generally our society have moved to this post-truth environment that is not healthy, and they are going after people and saying, well, no, that's not an exaggeration. It's fraud. So Moving on, Airbnb is my largest holding. I love those guys. The stock got hit pretty badly. As you said, it's lapping poor numbers. We talked to Brian Chesky on this show. I like what he's doing. He's doing kind of some boring stuff, things around pricing transparency and just kind of operational fixes. I generally find when I'm on a board that the CEOs who move shareholder value over the medium and long term aren't the ones with a lot of jazz hands who try, who go for kind of sexy quick wins, but that are very operationally focused and sort of huge companies. And my mom used to say how to eat an elephant, and the answer is one bite at a time. And I think how you build shareholder value is one small incremental operational change at a time. Every day, what can we do to get a little bit better? But yeah, this is all this is pretty interesting. The crypto guys taking their Bitcoin and going home, good riddance. I just don't. The notion that it's hard to do business in the U.S. Well, actually, most surveys would show that the U.S., I think, other than Singapore, is arguably the most business-friendly place in the world, and that oftentimes, to a fault, we opt for a lack of regulation or to be exceptionally business-friendly. We love corporations. We love this entity. We personify them. 5 of the 100 biggest corporations in America didn't pay any taxes last year. We've cut corporate taxes. We love corporations. So that just doesn't, in my view, that doesn't hold water. Do you have any thoughts?
Just that I completely agree. I mean, we talked about this last time. I think Binance as a company is predicated on illegality, and it can't exist within a strong regulatory system. And now they're complaining. They're probably going to say that the US is anti-innovation, that they're stifling progress. But the reality is that there are laws around commodities and securities, and you got to follow them. And so, they're not going to be able to exist here. And I think they're getting their heads around that. and so they're packing up and leaving. But it's sort of no surprise to me. I mean, my prediction in April was that this company wouldn't exist in the next 12 months, or at least it would be a weird pivoted shell of the company that it once was. So this to me is more evidence that that'll probably come true.
Let's go west. Let's go to big story number one.
Let's do it. Hollywood is facing its first strike in 15 years after a 6-week negotiation between screenwriters and movie studios collapsed. Almost 98% of the Writers Guild of America voted in favor of authorizing the strike, and their 11,500 members are demanding greater pay and greater transparency from their employers. Much of the dispute has to do with streaming. Under the traditional broadcast model, writers produce roughly 22 scripts per season and earn royalties if the show performs well. But streaming series are usually 8 to 10 episodes, and royalty payments are much more limited. Also at issue is AI. The WGA's contract demands that studios do not use AI to write scripts, and also that the writer's own work is not used to train AI models. Thousands of writers picketed in New York and LA last week. Several late-night shows went dark. And while streamers have a backlog of content to serve in the meantime, the pressure is on to produce more. Scott, we had a long discussion about this yesterday. You feel that people are misplacing the blame. Can you take us through your thoughts?
Yeah, so in typical Hollywood fashion, there's all of these shots of famous actors standing shoulder to shoulder with their union brothers and sisters on the picket line saying, "I stand with the writers." And, that's adorable. But and there are some real contrasts here, as there always is, between kind of the working class, if you will, and management. Particularly David Zaslav, the CEO of Warner Brothers Discovery, who made $39 million last year, and get this, $250 million the year before, where they had a fantastic show called No Mercy, No Malice with Scott Galloway. 5 episodes, Ed. Anyways,
canceled it.
Look, as is always the case, at the end of the day, the culprit here is the end consumer and how much money they're spending or not spending. And what you have is, as evidenced by the fact that the ratings across the cable news networks, whether it's Fox or CNN, which have absolutely collapsed their viewership, the model is changing. And the model is more of an equity model than a revenue model. What do I mean by that? The streamers for a while were able to attract enormous market capitalization because the market valued growth over profits. And they overinvested, and now they're all, or most of them, are in a situation where they're not making nearly as much money. In addition, consumers aren't interested in watching late night with Jimmy Kimmel every night as much for 60 minutes where they can run 12 or 18 minutes of ads. That's an incredible business when you're running that many ads every night. And that supported a lot of writers who were very busy, and there was a lot of cash. There was a lot of money coming from the manufacturers of Nissans and opioid-induced constipation medication. And now that it's gone to streaming and consumers can get a ton of content for $12, you just have a different economic model. So unless you had options for whatever reason in Netflix, there's just less cash to go around. Mm-hmm. The industry is not getting bigger. And the studios are saying, all of a sudden, the market wants us to be profitable. We aren't. Our ad revenues are collapsing. And quite frankly, they just have the upper hand because a lot of the shows they're producing now don't need the same gross tonnage of writing strength or writing kind of heft or writers, if you will. There's just fewer of them needed. The other interesting part is about the AI, and that is I think the union it does make sense for them to say we need to put in place IP protection that if a script or a bunch of scripts from Modern Family get fed into an LLM and inform it such that AI can be used to draft scenes and scripts, then they should be compensated. Mm-hmm. But the notion that they should somehow put the kibosh on a technology is just fucking ridiculous. That's like saying we don't want you to use typewriters because that'll replace us. That's just a non-starter. Yeah. What I think you're going to see here is my understanding is a lot of the streamers banked a lot of content. I think all of the big guys have sort of looked at each other and winked and said, it's grown-up time. We've got to cut costs. We've got to hold the line here. I think this is going to be a strike that's going to go on for a while. I think there's probably a lot of distance between the parties. And I don't think the corporations or the streamers are going to give in. I think they realize their model has been flipped upside down. It's a poor economic model. They have got to cut costs. They have no choice. And this strike will not only have economic ramifications around what they pay riders, but it'll set the tone for future negotiations with different unions across the entertainment industry.
Mhm.
So I think it's about to get awfully chilly in Los Angeles. I think you're going to see, a lot of people out of work, at least temporarily. And the thing I don't understand about this industry is that the shows I worked on or try to work on, the writers have a lot of power.
Mm.
I'm shocked that they're not exceptionally well compensated because I'm trying to turn my book, The Four, my first book, Ed, New York Times bestseller. I'm trying to convert it into an original scripted series, sort of what Succession was
I did
to,
not know that. That's awesome.
yeah, it is
Sorry, go
awesome.
ahead.
You're not on the A team here. We don't let you in on stuff like this. But what Succession was to family-owned media, or Billions was to hedge funds, we're trying to do the same thing around big tech. And the reason my agent got so excited was we got a fantastic writer attached to the project.
Mhm.
And it just strikes me that kind of the center of gravity around getting a project going and getting distribution is around getting a great writer. So I'm shocked that I'm just surprised that writers feel that it hasn't worked. And just more generally, I don't think unions work. I think they do. I think they're the perfect enemy. I think they do a shitty job of assessing the situation. They're easily atomized and beaten. I don't think they work.
Mhm.
And obviously, there are some good unions that do a good job, but for the most part, I just don't think they represent the labor force
Yeah.
well.
Yeah. Part of the issue here is that with these streaming shows, there are, with the network shows, you have 20 episodes, and with the streaming shows, you have like 8 to 10 episodes. And then if you just look at the median weekly pay over the past decade, if you adjust for inflation, it's declined around 23%. And that's for episodic television. If you look at movies, it's declined around 14%. And if you look at what they're actually demanding, what they want is around $429 million a year. I generally agree with everything that you've said thus far, but I think the main thing that one of the first things that the writers would point to is the CEO compensation that you mentioned. So CEOs of these TV companies are making around $40 million a year. Bob Iger made $46 million, Ted Sarandos made $38 million, and then you mentioned David Zaslav, who made like $250 million last year. Isn't it on them to start cutting their pay packages dramatically in order to serve the interests of the writers? Or what do you think?
Oh, isn't that adorable? Isn't that adorable that you would think these individuals would sacrifice? Come on, man. You're a CEO. You're a CEO, and you've worked your whole life. You've kissed a ton of ass, played Game of Thrones politically. You're finally the CEO. And your buddy Bob, who became CEO of Viacom or whatever, made $200 million in 5 years. You're really going to decide to be a good guy and cut your pay? No, you're going to clock as many Benjamins as you can because you worked your ass off. And no one says at your funeral, and Joe or Lisa was such a good person, she took 60 million instead of 120 during their 6-year run at Marvel or whatever. That's just. Yeah, that's all fine and good until it's you, and then you're going to reach your hand as far and as deep as possible into the barrel. What this reflects is just a broader trend in society, and that is CO pay has gone from about 30 times the average worker's compensation to about 300. And the primary reason is that boards decide the compensation of the CEO. The CEO is generally a very likable guy or gal. You get to know them. And these compensation consultants come back, and I've been on these boards and say, okay, this is a streaming media company that does $3 billion a year. The average compensation for a media company at $3 billion is $11 million a year. That would be 50. 0 to 100, 50 is average. And we all go, but Lisa's working really hard and is a good person. We got to pay her at least 60. And you think, okay, that's not a big deal. But when you're paying people 1.2 times the previous year's average, essentially what you have is in 5 years, it's 1.2 to the fifth power, and their compensation is doubling every 3 or 4 years. So it's runaway compensation. And then the next year, the studies come back with something that says, well, actually, now average compensation for the same CEO of the same company is $13 million. even just one level down, the COO, the CFO make dramatically less. And I'm not sure there's anything we can do about it because we assign too much credit and too much blame to the top guy or gal. So getting the right guy or the right gal, you pay up. I've been on these boards where we just have to hold our nose and give them a pay package that is just so outrageous. But you got to pay market. These people will do a market check and find out, well, if I go over to Comcast, I'm going to make this much money. I think the only way you address this is with, and it's not a solution here, but it's one thing, is that at a minimum, we need to have a more progressive tax structure. And that is if you're making over $1 million a year, you should probably pay higher taxes and not be privy to things like opportunity zones or long-term capital gains. I mean, the Social Security tax, Ed, let's say you're making $150,000 a year, you pay $9,000 a year, or approximately 6% in Social Security taxes. If I make $1.5 million a year, I pay, wait for it, $9,000 a year. Social Security tax tops out at $160K. That makes it a regressive tax. So this just reflects what has happened across every industry, and that is income inequality within the industry. CEO compensation is out of control. I don't know if there's anything you can do about it. What you can do is at least have them pay their fair share of taxes. But at the end of the day, you said that, what was the stat that the average compensation on an inflation-adjusted basis has gone down 23%?
23% in the past decade, yeah.
Okay, but look at what's happened to your expenditures on the consumption of great content. Yep. You are now spending at least 23% less. When I was your age, I had to pay $100 to $150 so I could get Food Networks 4, 5, and 6 because I wasn't allowed to have HBO or CNN unless I had the Food Network and Bravo and all this other shit that they bundled in. And also there was so much regulatory capture with cable companies that they figured out a way to be the only cable company in all of Manhattan. And so they would raise prices. And then that chin, that mother of all chins, was met by a fist of stone called Netflix. But the bottom line is there's just a lot less money to go around because people your age can now spend $12 a month instead of $100 or $150 and get amazing content. Maybe you double up and you go 24 Netflix and HBO. Actually, it's a good question. Where do you spend money on media? And then there's one other huge elephant in the room that we'll talk about. But how much money do you spend on media every month?
Oh, God, I don't know. I honestly canceled a lot of my subscriptions because I just haven't been watching television.
Well, case in point. Yeah. Not enough money.
Yeah.
Okay,
but
so
I'm
zero.
I'm not a good example, but I'm your perfect example, yeah.
Are you saying that just because you think that chicks will dig it, that you're you read and you don't watch a lot of TV? Are you at home watching Keeping Up with the Kardashians like 18 hours a day?
No, it's even worse. I'm in the YouTube K-hole. I'm just obsessed with YouTube.
Okay, so there's YouTube. And then the other elephant in the room here is the writers aren't competing against David Zaslav or streaming. What they're really competing against is TikTok.
Yeah.
And that is the most valuable consumers in the world are teenagers and young adults because they're stupid and they spend a lot of money on dumb things like high-margin coffee and tennis shoes and apparel. And so advertisers love them. And here's the problem. They're not watching TV. They're watching TikTok. In addition, here's who the writers are competing against. There's 1.7 billion people on TikTok. Half of them are creators. So you have a talent pool that's the depth of the Mariana Trench, or 850 million people who are working for, get this, zero. Now, granted, they're not nearly the same quality as the 500,000 people employed by the streaming networks. But if you have 850 million creators, assume 1% are really talented. That's 8.5 million creators creating content for next to nothing that the consumer loves and is spending more time watching that free content instead of watching HBO or watching CNN or watching ESPN or what have you. So the bottom line is the tail that's wagging the dog here and who they should be picketing against is you, Ed.
Yeah.
And that's the bottom line. You're not spending as much time or money on traditional ad-supported television that supported a plethora of writers such that we could all tune into the Big Bang Theory every week.
Yeah. No, it feels like a lot of this is a question of like who actually holds the power here. And more specifically, how powerful are the writers, in fact? And one detail that I found really interesting from this guy, Rich Greenfield, who's an analyst, who's a media analyst at Lightshed, he points out that the longer that you prolong the longer that you prolong this strike, it could actually mean boosted profits for a lot of these companies, because a lot of them already have a massive backlog of content and they don't need to be producing more. They don't need to be increasing their expenses. And then there are also a lot of companies, specifically Netflix, who have a massive library of international shows, and they can continue producing those international shows. And so to me, what we're finding out here, it's like a very tough, difficult economic negotiation of who actually has the power here. And I think, basically in agreement with you, what we're going to find more and more is that writers actually don't have as much power as they think they do. And that's a shame, and that sucks. But it just feels like in a negotiation, ultimately the economic truth is going to win out here. And I think the economic truth is that probably a lot of those writers are likely should be out of a job. But, you know, that's a tough truth to say, and who knows if it actually is the truth. But
so why do you hate writers, Ed? No, you're exactly right. This is capitalism or the invisible hand of the market, and
yeah,
regardless of whether Bob Odenkirk marches and shows up, and all these photo moments that are just such radical virtue signaling from actors who are making $10 or $20 million a year because they're in the 0.1%, standing with their brothers and sisters on the picket line. It's gonna get ugly. For the writers here.
We should mention this one final point, which is residuals, and that's what a lot of the residuals is another word for royalties, basically, and that's been a big point of contention. So basically, residuals from streaming are way lower than residuals from cable. One thing that the studios pointed out is that the residuals actually hit an all-time high in 2021. The WGA's response to that is that the only reason it's hit an all-time high is because so many more programs are being made. So on a per program basis, residuals are actually way down. Now, the studios haven't responded to that, but what I assume that they would say is, well, look, we're making more programs, which means we're making more jobs, we're employing more writers, so you probably have a choice here, which is we can pay more to the best writers of the best shows, or we can depress the salaries of all of the writers on a per writer basis and give more jobs to writers.
There are some similarities here between big tech and what's going on in media, and that is big tech, they couldn't hire fast enough, and they stuffed so many calories down the esophagus of big tech that there was fatty deposits everywhere. I got to think employment is way up with the streaming wars over the last 20 years. And that is, and I'm evidence of that. When an angry professor with ED can get 3 TV shows greenlit in 3 or 4 years, it probably means they're reaching too far into the barrel. And I'm only being half serious or half kidding. Everything, I would imagine that employment has gone up dramatically, and similar to big tech, I think these companies are going to wake up and go, you know what? We could lose a third of our writers. They could go decide, to sell real estate or do something else, and we wouldn't miss them. And I think that is the ugly truth around what is going to happen in terms of the shakeout here. I mean, in sum, Netflix has trained every consumer to expect more for less. And that worked as long as the stock was going up based on subscriber growth. When the markets finally said, all right, now it's about profitability, the whole industry woke up and said they needed to cut costs. And they're going to cut costs across every dimension, including writers.
So Mia actually went to one of the writers' strikes today in New York, and she spoke to a lot of the writers. So she is probably far more equipped to opine on this than we are. Mia, what did you hear from them?
Hey, Ed. So, yeah, I did go to Greenpoint, Brooklyn today to go join some of the picketers. They were picketing on the set of what was supposed to be filming for FBI Most Wanted. So that was kind of fun. And they were covering an entire block. They were joined by members of the Screenwriters Guild, and they were supported by cars going by, honking. It was actually a really heartwarming scene, honestly. I think I harbored some skepticism of how effective unions are, like you both did. And then when I went, it was really kind of inspiring seeing everyone come together. And I talked to a bunch of these people, and there were some surprising takeaways. First of all, these writers do understand that these cable and streaming companies have obligations to their shareholders, and they have profit obligations, but they also believe that these companies have an obligation to pay their writers a livable wage.
And yeah, we've seen writers go from being able to earn a livable wage in New York and LA, the cities where this industry mainly is, to poverty levels, basically. I mean, like, to be able to get into a writer's room is harder than it's ever been. And then once you're there, that's absolutely no guarantee that you're going to be able to live in the city where you have to be working. It's insane.
In network, the more money a show makes for that network, the more residuals we get paid. Like, if they syndicated a bunch, we get more residual checks. But streamers have been very opaque about how many views their shows get, how many subscriptions a given show is driving.
The streaming companies are holding their data hostage. They, for a while, took this ridiculous position that they didn't know how many people had streamed a show, and it's like, no, this is what we're dealing with on the other side. They're straight up lying to us constantly, and using like these, like, oh well, you know, it's all a bunch of really difficult decisions because, like, well, what if someone just streams it for 2 seconds? Should that count as a whole stream? And it's like, sure, there are details to be worked out, but to hide behind that as an excuse for basically not paying people anything is absurd.
And they also were surprisingly unfazed by the threat of AI.
I mean, it's a stochastic parrot, right, as they say. So it's very good at giving you what the predictable next thing is. And if you want more predictable things in the world, then I guess that's what you want.
My fear is that the studio executives don't care about the job being done well. They care about it being done cheaply, and you can see in the sort of like list of proposals and counter proposals that the Guild published, like, AI was a topic that the studios full-on refused to engage on at all.
Studios don't even want to talk about it. It's like the third rail for them because they have their plans already in motion.
The fact that they're not brave enough to say, of course we're interested in humans telling human stories, is so lousy and has definitely motivated me.
You know, I'm sure it's as good as some weak writers and not as good as some strong writers, but it's only going to get stronger. It's been around for 7 minutes, and so it's developing faster than I think we as humans can, so that's challenging.
I think it would work the way a lot of capitalism works, meaning that it would make a few people so much money and it would make the rest of us hate every second of our lives. In that sense, total success.
I think there should be one union. I was in a union when I was younger. I'm technically still in a union, I think, as my classification as a prof at NYU. Somehow I'm with the AFL-CIO, or and I think it's a consortium of unions. I don't think it's a specific union, but it's a consortium. I think there should be one union, and it should be the federal government that raises minimum wage to $25 an hour. I'm not sure. I think they might need representation for something like this because it's a complicated business. But we'll see. I don't know the ins and outs, and this will go to my prediction. I think the studios have the upper hand here.
Let's move on to our second story. This earnings season, we've seen one phrase make a remarkably frequent appearance: AI. S&P 500 companies have mentioned AI more than 1,000 times on earnings calls this year, up 64% from a year ago. Between Google, Meta, and Microsoft, it was mentioned 161 times. Now, for many companies, talking about AI has inspired massive investor confidence. Palantir, for example, said it was, quote, running hard at AI technology, and its shares rallied 20% after the call. For others, not so much. Last week, we discussed Chegg, which, despite making plans to implement AI in its products, said that tools such as ChatGPT are harming its business, and the stock got nearly cut in half. So, Scott, clearly these companies believe they need to make assurances about their implementation of AI. My question to you is, why do you think investors are so sensitive to that word?
We got to play the clip. Have you seen the TikTok of Sundar Pichai from Google?
Amazing.
We've got it. Let's play that right now.
AI, generative AI, generative AI, generative AI, AI as AI, 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 AI. It uses AI to bring AI, 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 AI.
Okay, so we live in an era where typically stock prices or equity values are driven by two things: numbers and narrative. And that is, okay, you're in the automobile industry, which typically trades at 6 to 8 times EBITDA. And then the narrative, oh, we're going to EV, or Mary Barr does a great job of outlining this narrative around emerging markets. So she gets to trade at 7.5 to 8. And the CEO of Fiat Chrysler, or whatever they call the thing now, doesn't have a very cogent vision, isn't as articulate or compelling, so it trades at 5 times. But it traded within a band. The narrative kind of took you up a little bit, but not a lot. Things have totally flipped because now the majority of companies that go public aren't very profitable. So it's all about the narrative because the metrics are sort of up for grabs. Which number do you look at? Do you look at margins? There is no profitability. Do you look at growth, subscriber? I mean, it gets harder to value these companies, so it becomes about the narrative. And as a result, the number of PR and comms people who send me 5 emails a day saying, hey, would you love to have so-and-so on your podcast? I'm like, no, this person sounds like they brighten up a room by leaving it. But there are so many people flacking their leadership to try and shape a narrative, right? Or my favorite is when some big tech CEO comes to town and their comms calls me and says, would you like to come sit down with the CEO of Uber over dinner and hear his vision for technology? I'm like, oh my God, put a fucking gun in my mouth. Anyways, the ratio of bullshit spin to actual analysis or investigative reporting on these companies has gone the wrong way 12x. So the narrative is just huge. And so what you find is these individuals, these very smart PR and comms people, sit down with the CEO and do a lot of work before the earnings call because they know guys like us are going to go through the earnings call and actually literally track how many times they said the word.
Yeah.
And you can kind of get insight into their strategy. It's almost like an X-ray on the corpus of the company, parsing the words that they say and they repeat over and over. And nothing is accidental. This is very intentional. And what they're trying to do here is the ultimate jujitsu move and not be Chegg and say we're a victim. We're the predator. We're the apex predator. We're leveraging AI to massively increase our business. This is the closest thing I can remember is all of these companies started running ads saying, we're not Target, we're Target.com. We're not Williams-Sonoma, we're Williams-Sonoma, wait for it.com. I haven't seen this since kind of the mid and late 90s where everybody thought, let's accessorize our analog outfit with digital earrings called AI.
So you mentioned that they're very surgical about the amount of times that they mention that word, especially that word right now. Some companies barely mentioned it. So Apple on its earnings call only said it twice. Amazon only said it 7 times. If you were the CEO of a public company, specifically a public tech company right now, what would your communication strategy be? Would you just be hammering away at we are the next AI behemoth? Or would you go the Tim Cook route and just barely even acknowledge it?
So Apple is, Tim Cook's is Jesus Christ. This guy has added more shareholder value, literally, than any individual in history. When he took over the company, when Steve Jobs passed away, I think the company had a $300 billion market cap. Now I think it's $2.5 trillion or something. He's added over $2 billion in market cap. No one has ever done that. Now, granted, a lot of people would say it's harder to go from 0 to 300 billion than it is from 300 billion to 2.5 trillion. But be that as it may, he has added more shareholder value. He has the luxury of being very sober and being very adult and not using adjectives or embellishment and just talking down the stock, being very kind of the adult in the room, being very measured and sober. And that's how he is on earnings calls. And everyone is used to Tim just showing up and doing amazing work and thinking long term and not getting caught up in trends. 99% of CEOs don't have that luxury. If the stock goes down 30, 40% the next day after an earnings call, there's a 1 in 3 chance they're going to be fired in the next 6 months. And so there's a lot more jazz hands across the rest of the ecosystem. So you can't really compare Bezos or Andy Jassy even or Amazon and Apple. they just have so much investor credibility that they can be a little less flowery with their language, if you will. Everyone else,
You
get
think
out,
you think you think
get out your red
substantially more than
dress.
you
I'm
think
sorry, go ahead.
substantially more than Google? I mean, Sundar Pichai mentioned it, I think, over 60 times. Is Google less credible?
That's the correct question. And
Right.
the answer is that for the first time in probably 20 years, Google has been taken off their toes and onto their heels.
Mm-hmm.
All of a sudden, literally overnight, with the emergence of OpenAI and ChatGPT, all of a sudden, Google looks mismanaged. It looks poorly managed.
Mm-hmm.
And it just seems just sort of this. Mio said, "Oh, Google's amazing. Great. I think it has probably the greatest concentration of IQ since the Manhattan Project." And then all of a sudden, ChatGPT comes along, and you're like, "Oh my gosh, the best corporate VC investment in history was Microsoft. They leapfrogged Google, who developed much of the original technology, and all of a sudden, Google looks borderline incompetent for not innovating. How has search changed over the last 10 years? I'll tell you how it's changed. It's gotten worse. And that is the top 2 search returns used to be shaded in blue to say, all right, someone's paying for this, full disclosure. Now the whole fucking first page is paid for. And they have slowly but surely reduced that imagery or that shading such that Google, the first 10, 20, 50 returns aren't taking you to the best place for information based on your query, but another place they can monetize. And then ChatGPT shows up. And I think the power of AI and putting in a query into a generative AI is they're saying, okay, when you go into Google, you might get, you're going to get 10,000 results in 0.00055 seconds. What you'll find, though, is it's somewhere between a ratio of 1 to 98 if you really go through. But you got to do some work. You got to go down the page, find based on the source. What ChatGPT is betting, or AI is betting, is that we're going to give you one answer. We're going to give you one return, and it'll be somewhere between 60 and 70% accurate because, as our colleague in the marketing department at Columbia, Sheena Iyengar, says, choice is a tax, and consumers don't want more choice. They want to be more confident in the choice presented. And that is the entire shooting match around generative AI, is it gives you one good, maybe not perfect, but one good answer.
Mm-hmm. Yeah, I'd argue that it's less than good right now, but I think that's the race to make it a good one. You mentioned this idea of jazz hands. So a few years ago, the jazz hands were blockchain. In 2021, the jazz hands were metaverse. Now it's AI. You clearly believe in AI and its substance and its potential. How much of it is jazz hands and how much of it is real?
Well, what I tell people I spoke in Austin this morning at a conference, and if you look at academic research, it was a slow, enduring, multi-decade build around mobile and GPS. And mobile and GPS is arguably the most transformative technology of the last several decades. In metaverse and in crypto, a massive spike in academic research, and then it went away almost as quickly as it popped up. The curve around academic research or peer-reviewed research published in academic journals around AI looks eerily similar to the research curve around mobile GPS, which leads me to believe that it is a much more enduring technology. In addition, just anecdotally, when I used to go to these conferences and we'd all gather around some microwave or 1980s Moscow modern-looking microwave that would miraculously create a Yoda out of a bunch of goop, and there was the notion that 3D printing was going to change the world, I'm like, this is ridiculous. When I put on a headset, an Oculus, and I thought, other than just outing myself as an incel, this and getting really nauseous. I'm a nauseous incel. I'm a nincel. This shit's not going to work. Internet of Things never made any sense to me. The last technology I've been this excited about was voice. And I think this technology, I think if you spend time on ChatGPT or some of these other generative AI, I just think it's just striking. I've been working... my 12-year-old's totally into it. We're going to Istanbul for the Euro Cup finals, and we're planning our whole trip using AI. And you just can't, well, let me ask you, when you play around with AI, don't you just think, Jesus Christ, this is powerful?
100%. Yeah, for the first time, it feels like the hype technology has millions of use cases, and it's getting people to actually think creatively. I think people are probably I think people are probably going to take advantage of that and raise ridiculous sums of money at ridiculous valuations because of the hype. But ultimately, yeah, I completely agree with you that this one's actually going to pull the future forward for the first time. So yeah, I'm excited.
Yeah, I mean, look, there was .com got way ahead of itself. The web and e-commerce got ahead of itself. Mobile gaming got way ahead of itself. This will have a hype cycle. I think we're already kind of in peak hype cycle, and there'll be a lot of companies that can't live up to the expectations. But this feels like an enduring technology.
Okay, let's move on to our third story. Microsoft is betting on another hot sector in the tech industry, nuclear fusion. Last week, the company announced it signed a purchase agreement with nuclear fusion startup Helion Energy, and it will buy electricity from Helion after 2028. Now, the reasons we call this a bet is because nuclear fusion actually doesn't work yet. Unlike nuclear fission, which makes energy by splitting atoms, this process, like the sun, collides them. It's very powerful, but also very difficult, and so far, no company has been able to produce electricity from it. Now, nuclear fusion companies have raised more than $5 billion from big-name investors like Bill Gates and Sam Altman. Altman is, in fact, an investor in Helion. But this is the first time a purchase agreement has been signed. The implication, therefore, is that Microsoft believes nuclear fusion is right around the corner. So, Scott, Microsoft has long had this reputation as a sort of sluggish, almost outdated competitor to companies like Apple and Google and Meta. But this year they've made headlines in AI, and now they're making headlines in nuclear fusion. Is this the year that Microsoft finally shrugs off that reputation?
Oh, I think they shrugged it off a while ago. I think Satya Nadella is the CEO of the decade, and I mean, you're talking about the difference between, what's his face, Tom Brady, or Tom Gisele's ex-husband, and Troy Aikman, who went to UCLA, 3 Super Bowl rings, by the way. Both these CEOs are amazing, but I think you'd have to pick Satya just because of the renaissance. Microsoft and Apple trade off as the most valuable companies in the world, and occasionally Saudi Aramco slips in there. But I would argue that they're working with a pretty good hand when you sit on the Atlantic Ocean of oil. But anyways, what he's done here is just nothing. It's just nothing short of remarkable. They or his predecessors missed mobile. They missed social. They missed search. And yet it's the second or the most valuable company in the world, depending on the day you look at it. They have established the ultimate rundle in the form of Microsoft Office. They have a recurring revenue relationship with probably 97% of companies in the world that are over $10 million in revenue, and they continue to innovate. What's even more remarkable is just culturally, they've gone from Anakin Skywalker to Darth Vader to Anakin again. They're now seen, in the 90s, when I was coming of professional age, Microsoft was seen as the worst partner in the world, that they just abused their partners and they were terrible people to do business with. And now they're seen as great partners. I think this nuclear fusion thing is probably the influence of Bill Gates, who has been a real proponent, and I'm a huge fan of nuclear energy. I think that it's ridiculous to not have a sober conversation around the wonders and power and productivity of nuclear power in an age when we're really trying to get serious about climate change. And he's a big fan of it, knows a lot about it, is actually a big investor in one of the new guys in nuclear energy. So I would bet that he sat down with Satya and said, this is the future. Fusion is super interesting. My sense is there's still a long way to go, but recreating the sun in terms of energy is pretty exciting. And then Sam Altman, I've said this before, Sam Altman will be Time's Person of the Year because the richest person in tech, or the person who gains the most or creates the most shareholder value in tech, has a 1 in 3 chance of being Time's Person of the Year because of our idolatry of innovators. But what Satya has done here, and this corporate investment in OpenAI, and just the pivot and the cultural change, it's just nothing short of remarkable.
Yeah. I mean, you mentioned that you think Bill Gates had a part to play here. Do you think it's possible that Altman did as well? I mean, he's the CEO and the founder of OpenAI, who Microsoft invested in. He's the majority owner of Helion. He invested $375 million. That's his biggest holding that he has. Do you think it's possible that he sort of influenced this decision?
I wouldn't be surprised. It's on Sunday afternoon. Satya calls up Sam and says, "Sam, what are you doing, buddy?"
Mm-hmm.
And Sam goes, "Nothing, Sati. What are you doing?" And he says, "Why don't you come over here and rub lotion? Why don't you come over here and rub La Roche-Posay over the small of my back, and we'll sit out and smoke cigarettes and eat ice cream." I bet these guys are thick as thieves. I bet they are such good friends, mentoring each other. I mean, they are giving each other mani-pedis. These guys are tight.
Mm-hmm.
So, yes, I think that Sam and Satya are, figuring out how to redraw the maps of the world.
Mm-hmm. And if you just look at the terms of this agreement, this isn't actually an investment. This is just, we agree to buy your power. There are financial penalties if Helion doesn't deliver the power by 2028. It's not really clear what skin Microsoft has in this game, though. It's possible that maybe they've agreed to some sort of predetermined price per megawatt hour, whatever it is. Have you ever seen a contract like this in tech, and do you have any insight into what it might actually look like?
I don't know the specifics of the contract, but it strikes me that Microsoft, Satya is very shareholder driven, and Microsoft or Satya is as good as anyone, maybe with the exception of Bob Iger, of saying, all right, we have distribution. Also, Richard Branson is really good at this. Richard Branson never found a deal that he wanted to put his own money into. He always said, do you want my promotional capabilities? Do you want my brand? But he never put his own money into these deals. And also Disney was great at getting investors. They had these LLC vehicles back in the 80s and 90s where they get someone to put up $100,000 so they could invent, they could say they owned part of ET or something, and they shitty returns, but incredibly low cost of capital. My sense is a deal like this, when you're Microsoft and you have this kind of distribution, you can offer this sort of credibility. Anything that Satya signs up for, anything that has a press release, a joint press release with the Microsoft logo on it, that business is taken very seriously. So they can extract, several kilos of flesh, if you will, in terms of terms. And probably part of those terms are, they will say I bet he turns to his CFO and says, this is all upside for us because we're not putting much capital to work.
Yeah. And then just finally on nuclear fusion. So one theoretical physicist from UChicago said, quote, "This is the most audacious thing I've ever heard. In these kinds of issues, I will never say never, but it would be astonishing if they succeed." One expert, when there was a breakthrough 6 months ago when scientists achieved a net energy gain from a fusion reaction for the first time, one expert said, this is one of the biggest results of science in the past 20 to 30 years. Nuclear fusion's been called the holy grail of clean energy. It creates 4 times more power than nuclear fission. There's no greenhouse gas emissions. There's no nuclear waste. It all sounds almost a little too good to be true. Are you excited about nuclear fusion, and is it something that you would want to invest in yourself?
I think it's incredible, and I'm super excited about it. And the idea of recreating the sun such that you can create non-carbon-based energy source. I mean, what's not to like? I think it's wonderful. Mm-hmm. I would absolutely invest if it was. I wanted to invest in Bill Gates's nuclear power company. I'm trying to figure out ways to be part of the solution with my capital, in addition to buy a much bigger plane. Because when Daddy owns a Gulfstream, he goes from being interesting and quirky to fucking fascinating.
You had one, right?
I did have one.
You got rid of it.
I sold it. Yeah, I sold it. But that doesn't mean I can't buy another one after my huge windfall from my investment in fusion or whatever gets Daddy the Gulfstream. I don't care. I or you. I just want to recreate the sun such that I can load up the plane with people headed to Costa Rica. Anyways, I don't know how we got here. Yeah, I would invest. I think it's very exciting. I think it's incredibly cool. I imagine it's going to go into a hype cycle, but in terms of its impact on the world, it's hard to imagine a technology you would want more to win. If you look at the people sitting on top of fossil fuels, they generally aren't very good people. Other than the Norwegians, those are really nice people. The Norwegians are really nice, and some of the people in Texas aren't that bad. I was just in Austin, Ed. It was nice, but yeah, I think it's super exciting. I wouldn't be surprised though if whoever's in charge of nuclear fusion pulls an AI move and in a year says, "I'm worried about fusion's impact on the future, and I want to pause." I'm just so sick of hearing about these people who develop these technologies and then get really concerned about the time they stopped cashing in their options. Anyways.
Okay, let's take a look at the week ahead. We'll see earnings from Walmart, Target, Home Depot, Alibaba, and Baidu. What is your prediction?
So, was it Ramsey Bolton, the guy who, what was the guy who gets tortured slowly but surely? Ramsey Bolton tortures.
No idea.
You didn't watch Game of Thrones?
No,
you have to
YouTube, remember?
So you need to steal Mia's password that she stole from her parents for HBO Max. Game of Thrones literally is life-changing. Anyways, Ramsey Bolton tortures Rick over the course of about 3 months, I think, including, he does just some pretty vile things to Rick. Anyways, I think that Ramsey Bolton is the studios, and the writers are Reek or whatever his name is. I think this is going to be really fucking ugly for the writers. I think they are playing with a weak hand, and they don't realize what a weak hand they have. I think that this strike is going to go longer, and it ultimately ends up with the writers getting very little and trying to put lipstick on a pig here. But the market dynamics are really in the give all the leverage to the studios.
And when you say lipstick on a pig, they're going to say, oh, we love the deal that they gave us after 6 months, and in reality it's a shitty deal? Or
yeah, they'll come back and say, oh, we got this, and this, when the reality is the writers probably would have been better off just taking a lesser deal right away. I think this is going to just get – I think this is only going to be – this is going to have whispers or echoes of the coal miner strike in Britain, where basically the Iron Lady said, go fuck yourself. And they essentially got nothing. I don't think it's going to be that bad. That's probably a little bit much. But I think all the leverage here is with the streamers.
Yeah, I would agree with that. And I would also say that I bet a lot of them will be out of a job, considering all of these companies are stating that they're going to reduce the volume of content. Meanwhile, they have to pay writers more on a per week basis.
Yeah.
So
did I tell you I hired a person to come in and talk to us about how we could use AI, Ed? That's right,
what I was
Ed.
hinting at. Yeah,
that's right.
But I'm going to figure out how to leverage AI. I'm not going to let it replace me. It's different.
Yeah, I am so excited. We've hired this guy to come up with new product ideas, to storyboard out the map around how we produce our products here and see where we can get efficiencies and see what new products are coming up. We're talking about turning the dog into an influencer, where I get all these emails every day asking for advice. And we're talking about trying to experiment with a bot that gives people advice in the voice of Scott Galloway. And then when he does a really bad job, they can say, okay, now in the voice of Ed Elson.
Who's this AI guy? Was he like
his name's
become
Vishal.
An expert like a week ago? Or?
His name's Vishal. I'm not going to give his last name because someone else will hire him. And I think I want to keep him in the dark as to his real value in the marketplace. But we've engaged him, and I'm so excited about this technology. And I'm also sick of this bullshit catastrophizing. I think it's going to be great for the economy. And, what I've said to people is, look, AI is not going to take your job. Someone who understands AI is going to take your job. Start playing with this and figure it out.